Good morning, everyone, and welcome to NYSE Live. I'm Kristen Scholler here at the New York Stock Exchange. Well, equities are little change this morning as the U.S. markets prepare to open for trade and as Wall Street gears up for a busy week. We've got more corporate earnings on tap as well as the Federal Reserve's first interest rate decision of 2026. Market odds are 97% that the central bank keeps rates steady on Wednesday. Thursday, we'll see NYSE-listed Caterpillar reporting earnings before the market opens. And then Apple set to report its earnings results after the market closes on Thursday. Let's take a look at what's on tap this hour. This weekend's storm brought snow, ice, and challenges for business when it comes to travel and supply chain disruptions. David Margolin, a senior meteorologist at NYSE parent company Intercontinental Exchange, will break it down. Plus, global leaders and C-suite executives from around the world gathered in Davos last week for the World Economic Forum. An economist will tell us who emerged as the biggest winners. At 9:30 a.m. Eastern, we'll take you live to the opening bell podium as we always do. Investors preparing for another eventful week. And we're going to see CNBC open equity markets, of course, to celebrate its time here at the New York Stock Exchange. All right, well, there's a lot on tap as usual, and we begin with a story that's impacted virtually everything in the Northeast, including the markets. That is Sunday's winter storm dumped more than 10 inches of snow on New York City and more than a foot in surrounding parts of the tri-state area. Joining me now with more in New Jersey is David Margolin. He's senior meteorologist at NYSE parent company Intercontinental Exchange. David, it's good to see that you are hopefully warm and cozy in New Jersey as this storm is underway. How historic was this?
Yeah, good to be with you, Kristen. This is certainly one of for this area, it's the biggest storm we've seen in approximately 5 years. It feels like a lot longer. And for the region in general, when you include back toward Texas and the Southeast, it's probably the biggest storm we've seen in about 10 years.
We feel the impact, that's for sure. How are you seeing this storm affect market conditions, including power outages and the supply chain?
Yeah, so it's a combination of factors here. So across the South, they saw a lot of ice or freezing rain, and that causes a lot of problems with power outages. So the areas where we're seeing the most power outages right now are across places like Texas, Tennessee, Kentucky, Louisiana. There's almost 1 million users right now without power. Of course, with airports and just travel delays in general, we're seeing that sweeping across much of the eastern third of the country from Texas to Southeast, all the way up the East Coast. And the other factor, which is something more related to what I do on a day-to-day basis, is with natural gas supply and demand. So with the cold and the snow, certainly we've seen demand spike. This is the highest level we've seen all year for basically this week. But also, and this is something that's not maybe as well understood, we're also seeing an impact in terms of the production, actually what's coming out of the ground and going through the pipelines. When it gets this cold, and this is one of the colder air masses really we've seen this week in a couple decades for this time of year, it actually slows the amount of gas that can come out of the ground. So that's compounding the problem, as you can see in the chart right now, and really sending natural gas prices very high.
How does snow impact markets in a more complex way than other weather events?
Yeah, so it's a combination of factors, a little bit like what we talked about, but especially when you get like ice, the freezing rain and sleet, it can actually have a major impact on not just the natural gas supply and demand like we talked about, but it has a more dramatic or more impactful problems on travel. Right? Because with the ice, with the freezing rain, basically it causes a sheet of ice, right? And so that's historically when you see the worst travel problems. And that's why right now we've seen most of the power outages and the more severe sort of travel impacts across, if you're looking at that map right there, like really from like the Dallas area across Louisiana, Mississippi, Alabama, into parts of Georgia, especially just north and east of Atlanta.
It's not just the snow, of course, impacting conditions. It's also extreme cold, Dave, and something, of course, our viewers will continue to need to monitor. What does this mean for natural gas and overall production?
Yeah, speaking of that cold, just to put this in perspective, on that map that you just had up there, we're looking at the potential for min temperatures to get below zero. It's about a 50-50. It's about a coin toss in Philadelphia and New York later this week. And if that sounds cold and unusual, it is. The last time Philadelphia and New York at LaGuardia Airport were below zero, you had to go back to the mid-90s, the winter of 93, 94. So this is a very significant event that's hitting, that whole area really from the upper Midwest. Chicago was about -10, -15 a couple days ago, all the way into the Northeast. And when you see temperatures like this, I mentioned earlier about how we're already seeing some freeze-offs and so a reduction in production. We're going to see that increase, especially for the Northeast areas of the country. The Appalachian part of the sort of Northeast, from interior, say, Pennsylvania down to West Virginia, some of those areas are going to get down to about -10. So we're likely going to see a peak in production freeze-offs probably later this week, which again is going to put more pressure on natural gas prices.
All right, so you mentioned where we are a few days out from here, Dave. I do want to talk about what is next, of course, in the coming days and the weeks. What can our viewers anticipate?
Yeah, so this pattern we're in, this cold and snowy pattern, it's going to be here, it looks like, for a while. So we've got the sort of ingredients to kind of lock this in. So what do you look for cold and snowy patterns? You look for a lot of what we meteorologists like to call blocking in the atmosphere. And basically, when you have a block across the Arctic regions, it forces the cold air, instead of bottling the cold air up near the poles in northern Canada, it forces it south, right, into the Midwest and eastern parts of the country. That looks like it's going to be locked in for a couple weeks. With that, we continue to expect these pieces of energy to move across the southern parts of the United States or out of the West. And then it comes down to timing, right? If these pieces kind of come together. Right now, it looks like we're going to have another opportunity this weekend, maybe early next week, exactly the chart you have there, for another snowstorm along the East Coast or Northeast parts of the country. So again, timing still needs to be worked out. Those details need to be worked out, but the ingredients are there for another storm probably about a week from now.
All right, Dave Margolin, we'll be checking in with him throughout this winter weather. He's senior meteorologist at the NYSE parent company, Intercontinental Exchange, or ICE for short. Dave, thanks as always.
Thank you, Kristen.
All right, everyone. Well, coming up, an economist will reveal who came out as the biggest winner at last week's World Economic Forum in Davos, Switzerland. First, though, ICE is using data science to help clients manage everything from inclement weather, as we just discussed, to the housing market. Let's take a closer look at the science behind it.
Data science can help address some of the biggest challenges in the financial markets. If we focus on the mortgage market and follow the life of a loan from origination right through its pricing in the capital markets, our data science capabilities can provide a deep level of insight and analysis to a variety of stakeholders.
At ICE, we have extensive data sets, especially around three pillars: the property, the mortgage, and mortgage performance. This trifecta of data and its history is a bit of a data scientist's holy grail. Let's imagine a single property for a moment, 123 Main Street. And before mortgage is a twinkle in its originator's eye, we can apply data science to gather and curate detail about the property and its transaction history. Once a mortgage is originated, it will land in a portfolio, either as a whole loan or as part of a mortgage-backed security. Data science and analytics actually allows us to provide insights along the way to the performance of that mortgage, prepayment, default, forbearance, even natural payoff, updated values, tax estimates, and we can also measure what's going on in the market around the property or things that may impact the performance of that mortgage. As that loan on 123 Main Street is transacted, data science will be used to identify further risk and opportunity.
Quantifying loan-level climate risk requires knowing a suite of information about the property being mortgaged. We also need to model how severe a given hazard, like wildfire or flooding, will be both now and in the future at that specific location. Bringing all of this data together to quantify loan-level climate risk requires using data science tools to spatially join data sets of different resolutions, address data incompleteness, and build models to infer asset-level risk. The Sustainable Finance team has computed loan-level energy usage, energy bills, and carbon emissions, a statistic that helps us assess the affordability of a property over the duration of a loan.
The secondary markets are a way for originators to clear loans off their balance sheet. This means that they can take more risk and help more borrowers. That loan that we scored and got performance information about, it would likely end up hedged using a rate lock future on one of the ICE exchanges, and it's probably going to end up in a loan forward vehicle called a TBA. As this loan goes through its life, these models for projecting prepayment and defaults become key in figuring out how the loan will perform on the forward.
More investment flows into funding mortgages and housing, which puts more families in homes and tends to be the most important asset many people will ever own.
As we stand on the cusp of America's 250th anniversary, we're reminded of the principles that have powered the world's greatest economy.
The New York Stock Exchange is a cathedral of the capital markets, replete with rhythms and rituals that allocate resources towards socially valued uses. That story will reach a rare milestone when our republic marks its 250th year. Anniversaries of this magnitude demand more than just ceremony. They ask something of us. They invite us to reflect, to ensure that the future that we shape will prove to be worthy of the legacy that we've inherited.
Welcome back to NYSE Live. Global leaders like President Donald Trump to industry titans like Elon Musk and Jamie Dimon convened in Davos, Switzerland last week at the World Economic Forum. NYSE President Lynn Martin was on site too. Well, joining me now to talk more about what unfolded and what comes next is Daniel Lacaille. He's chief economist at Tressis. Daniel, good to see you this morning, joining us from London. What were your takeaways from Davos this year?
I think that the main summary of what happened in Davos was the clear evidence that for years we heard that the solutions to global complex problems were big government, high taxes, government interventionism, and also uncontrolled immigration. And in this particular event, what we have seen is that the overwhelming response from the audiences and from businesses is that those are not the answers. And the United States has shown with, I think it's the biggest group of officials that came to Davos in a very long time, that there are better ways of leading economic growth and that those only lead to stagnation. And we saw from Canada, the UK, France, Germany, the United States is growing at a 4%, 4.4% annualized rate, while the rest of the peers globally, Germany, France, Japan, the UK, Canada, are all in stagnation. No? So I think that the big, let's say, summary the big conclusion of Davos is that the old Davos is dead and that a new Davos that is focused on free markets, on open economies, on entrepreneurship and business development is coming back to life.
Does this change your economic projections for 2026, Daniel?
I think it does, because if you think about it, one of the big challenges for 2026 was that all of those negative elements that had been building for years could lead to a massive reduction in economic growth. At least for 2026, what we see right now in our latest projections is that the United States is going to be the global leader of developed economies in terms of economic growth. It's going to be above 2.6%. It could reach 3% easily. And at the same time, the euro area is going to avoid a deep recession precisely because Germany gave a very, very strong message in Davos in which Chancellor Merkel said that the enormous level of overregulation, the big problems of the European Union needed to be solved. Those are positives. And I think that little by little, we are seeing developed economies do a little bit better, abandoning that statism and interventionism. And at the same time, emerging economies like India are doing very, very well, also opening to the world and reaching new agreements. And that is also a positive.
I do want to talk to you about the Fed, Daniel, because not only are we getting a Fed decision on Wednesday, and markets nearly certain, earlier this morning it was a 97% chance, the odds that the Fed does hold rates steady at its first meeting in 2026, but we could hear as soon as this week President Trump's pick for the new Fed chair, set to, of course, take the helm in the latter half of 2026 as Jerome Powell's term expires. What matters here?
I think that what matters is that the Fed finally admits that they were incredibly wrong about inflation, because the decisions about rates that they have taken were based on an idea that tariffs would generate an enormous level of inflation and a very big problem for the United States economy. None of those things have happened. So once we have a very clear picture of those disinflationary pressures being quite evident throughout the US economy, then it is important that the Federal Reserve changes its course and brings rates back to the neutral level. They may hold rates in this meeting, but the Fed needs to at least cut twice this year, because we have to remember that holding rates so above the neutral level is very damaging for the labor market. Holding rates for 100 basis points above the neutral level for a year, according to the Federal Reserve of Minneapolis, reduces job creation by 1 million because it hurts small and medium enterprises that are the biggest drivers of job creation. Therefore, what we need to see is that the Fed goes back to the neutral level. That would require at least 2 rate cuts, and it's important that the Federal Reserve abandons the narrative of tariff impacts and goes back to what they should be, which is data dependent. And I think that the nomination of a new chair president is very, very relevant, because that is what is expected from markets, that they are truly data dependent and not shifting from data dependent to narrative dependent according to estimates that then become wrong and hurt the economy.
Daniel Lacalle, chief economist at Tressis, with a Davos recap. Daniel, thanks so much.
Thank you very much. Have a great day.
All right, everyone. Well, up next, the NYSE announced its plans to develop a tokenized securities platform that will facilitate digital 24/7 trading. We'll have those details on the other side of this break.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of the American financial system than this one.
At the NYSE, we applaud SEC Chairman Atkins and the entire Trump administration for working to reduce the burdens on existing public companies and soon-to-be public companies.
I believe that we will ensure that the American story, which began in many ways just steps outside, is preserved not by memory or speeches alone, but by the courage of those who are determined to chart its next chapter.
When we talk about the titans of industry and we talk about the titans of finance, there's a reason that we're all coming together still after all these years to the corner of Wall and Broad Street.
We are ringing the opening bell this morning to celebrate the launch of 6 new ETFs by direction.
We look forward to many more. I mean, today's 6, we're going to do hundreds more.
The New York Stock Exchange, the home of ETFs.
Welcome back to NYSE Live. The NYSE made a big announcement last week. It's developing a tokenized securities platform that will allow for digital 24/7 trading. This new venue, which will include tokenized stocks and exchange-traded funds, is set to launch later this year, pending regulatory approval. Let's hear more from Michael Blaugrund. He's VP of Strategic Initiatives for Intercontinental Exchange.
Well, what we're really excited about with the new tokenized venue is that we're going to offer a complement to the very well-functioning, very effective traditional markets with a tokenized offering that will enable the user experiences that are becoming sort of the de facto standard for today's retail traders. That includes 24/7 operations, that includes the ability to trade in fractional shares, meaning you can put in an order in dollar-based quantity instead of in share-based quantity. And it'll have the ability to instantly settle into stablecoins, so that people that are coming into the investing world through the crypto environment will have a very natural transition to invest in the world's best companies.
Tokenization might be a new word, let's say, for some investors. Is that simply a digital representation of a security? How would you describe it?
Sure, you put it very well. Tokenization is using blockchain technology to encode in a smart contract the nature of that asset. With respect to our solution, we're going to integrate both with traditional securities that are tokenized via the DTC, which is the depository for the traditional book entry securities, as well as digital transfer agents, companies that are helping issuers bring tokens digitally native into the primary market. We'll support both of those types of securities, and will allow people to trade on NYSE tech, but then settle onto a blockchain.
So it's building on that infrastructure that already exists from a technological standpoint, is that right?
That's right. So NYSE members today could subscribe to this new venue. They can use technology with which they're very familiar already. And we're going to use market structure conventions that are very traditional. All of our trading will be intermediated by broker-dealers who are registered. The venue is going to respect investor protections that are common in the market, like limit up, limit down, volatility controls, and trading halts, and protecting the NBBO, which ensures that trades don't go off at aberrant prices. So we feel like we're able to introduce something that's going to leverage the best of this new technology without requiring really any significant regulatory exemptions or new policymaking.
So for traders, they get 24/7 access. And for issuers, what does this mean?
So I think there are a number of issuers, particularly some of the largest ETF issuers, that are very, very interested in getting their products in front of this next generation of investors who perhaps are coming into the market through crypto. Maybe they're getting interested in quantitative trading through prediction markets. There's sort of a whole new spectrum of people coming into the space. And so to the extent that there are investment dollars looking for a home that are currently living in digital wallets and maybe they're being funded in stable coins, our venue is going to offer an opportunity for those ETF issuers and crypto-forward corporate issuers to begin to bring their products into that ecosystem.
Now, this is under development. I know you mentioned it is pending regulatory approval. What are the next steps in this development?
So we're working diligently with the regulators to prepare for the approval process, and we anticipate that will go smoothly given that we're largely conforming with the existing conventions. We're working with a number of our broker-dealer members to understand their desires and potential engagement as we shape some of the final details of the trading algorithm and execution models. And we're engaging with the ETF community and other issuers who are very interested in understanding how this will work and how they can adapt to take advantage of it.
How does this fit into the broader strategic initiatives of the NYSE's parent company, Intercontinental Exchange, or ICE for short, as some people know it?
So we think it's really, really important that ICE remain at the forefront and at the center of the markets ecosystem. And so we're at a point in time that's really, really interesting and really, really exciting, where you have significant technology evolution occurring at the same time that you have regulatory change and legislation for crypto and other digital assets. So we think this is a really important inflection where ICE can take the best of what we've learned from electronifying traditional markets and now take that from electronic order books now onto blockchain infrastructure. So whether it's our 6 global clearinghouses, whether it's our 13 global securities and derivatives exchanges, our mortgage business, all the different critical markets that ICE operates, we're going to ensure that we're future-proofing that business, both from a technology perspective and as regulatory and competitive pressures change.
Thanks again to Michael Blaugrund, VP of Strategic Initiatives for ICE, for that interview. Well, stay with us because up next we'll have the opening bell live here on Wall Street as equity markets prepare to open despite what's been a snowy mix for those commuting in this morning.
"16 years ago, an anonymous person released an idea onto the internet. No identity, no institution behind it, no marketing strategy. It was just a white paper and a challenge to everything we thought about money. What if money were open instead of closed? What if it belonged to everyone instead of being controlled by a few? Bitcoin survived every attempt to kill it, because the idea itself was stronger than the forces that tried to stop it. And now, today, inside one of the most iconic institutions in the world of finance, we honor a creator who never asked for credit, never stood in front of cameras, and ultimately stepped away so that the idea could stand on its own. Satoshi Nakamoto."
Why are we here? Because Magnum Ice Cream Company is an ambitious company. We're all about growth. And for growth, you need people and you need to have belief that focus on only ice cream will propel this business. These folks here in the room wake up every morning thinking about ice cream, and they go to bed thinking about ice cream, and that's why it will be a successful company that delights the world with unbelievable products.
look. Bell podium anchors for CNBC's Squawk on the Street, a mainstay here on the floor of the NYSE, are celebrating their 20th anniversary. Currently anchored by Jim Cramer, Carl Quintanilla, Sarah Eisen, and David Faber. All right, we're off to the races. U.S. equity markets open like normal despite what is a wintry mix outside. Still, we see stocks little changed. And joining me now as we begin what will be a very busy trading week is Jeffrey Roach. He's chief economist at LPL Financial. Jeffrey, it's great to have you on the show this morning, joining us from Charlotte. I hope you are warm down there amid this winter weather. Let's talk about what's on tap this week from an economic standpoint. What stands out to you?
Well, speaking of warm, the economy is certainly running on the warm side. So I think this week's going to be interesting. It's a follow-up from Davos. I think there were some fundamental changes in the way that the game is played, clearly, with major speeches last week. And I think this week is a continuation of how things are going to shake out for 2026. Expectations here, I think 2026 is going to grow above trend, 2.8% GDP growth. Inflation is actually going to decelerate. And the only way we can actually do that is with robust productivity gains, which we actually saw in the last couple of quarters. And I think that's going to be a major conversation on Wednesday during the Fed press conference.
What does this mean for the Fed's next decision on rates and the path forward for borrowing costs?
Well, we're in this unusual period where I think folks are definitely waiting for how the tariff pass-throughs will impact inflation. And we do expect some hot numbers in the next couple of months. In fact, we did get the latest numbers for October, November last week. I think investors really cheered those numbers because on month to month, both for those months reported, month-on-month change was about 2.2%. And that's okay. It's better than running hotter in the 3s and 4s. But a 0.1 month-on-month is where we need to go. And we need a couple of months with that really low run rate in order to pull down the annual rate of core PCE. Again, core PCE is the Fed's preferred measure of inflation. I think in the near term, we're going to see a little bit of those hotter numbers. Hence, that's the reason why some of these markets are really uncertain on where the long-term direction is going to be. My view, personally, I think by the end of the year, we're going to see core PCE closer to 2.5%, but that's a little bit of ways to go because the latest number is 2.8.
We're going to be watching, of course, the inflation data that we get later this week as well. Jeffrey, I do want to ask you about productivity. You referenced it earlier. AI named Times Person of the Year in 2025 remains a big topic of conversation as 2026 gets underway. How does AI factor in to your economic outlook?
Well, certainly one of the strongest drivers of growth that's good for the economy as it relates to inflation and the labor market is productivity, and hence the AI conversations. You know, I think one of the things that was overlooked in the last press conference in December was when reporters really pushed back on the chair saying, hey, look, you revised upward your growth expectations, downward your inflation expectations, and at the same time, you had a rising unemployment rate. What gives? And I think the chair revealed his hand a little bit by saying, well, we are implying a strong productivity framework in order to get that Goldilocks scenario. Interestingly enough, I think the chair does have data to support that thesis. You know, Q3 productivity growth was 4.9%. That's excellent. I think we actually have the setup for that productivity gains to continue, fairly strong gains, so we can actually have above trend growth this year, decelerating inflation, and at the same time, perhaps a few upticks in unemployment. But you have to have productivity growth to make all that happen.
What does this mean for corporate America as we are beginning what will be the busiest week of earnings, with major tech companies set to report like Apple, Meta, and Microsoft, and of course NYSE listed Caterpillar reporting its quarterly results on Thursday before the open?
Well, I think some of these consumer names are really important to listen to, those earnings calls, because it'll give us a nice look at how the consumer is doing. So far we saw real consumer spending November grow pretty well. Within that same report where we get our PCE number, deflator numbers, that's the inflation side, we also get income and spending all within that report that was released late last week. And I think we need to watch carefully this week in any further signs that the consumer perhaps might be feeling under pressure. So far, we're still seeing that K-shaped experience. So your middle upper income consumers are still doing fine, still a lot of real spending, hence fourth quarter GDP could come in above 3.5%. That's amazing after a very strong Q3 number. So Q4 is strong, a little bit of uncertainty with the shutdowns there, of course, that happened in the fourth quarter. But so far, the consumer is holding up. That's going to be something I'm watching this week, in addition to how the Fed press conference goes.
All right, Jeffrey Roach, Chief Economist at LPL Financial. Jeffrey, thank you, as always, for joining.
Thanks.
All right. Well, still to come, here's a live look of the trading floor of the New York Stock Exchange. Markets are open per usual, and we've got a trio of startups that we're going to highlight. Muse, which says it's operating a system for hospitality, raised $300 million in a Series D round, and its founder will tell us how it's using AI to set a new standard in the hospitality sector. Plus, Preply just shared that it's reached unicorn status following its latest funding round, and its CEO will tell us how it's going to deploy this new capital and how AI, yes, is changing the learning experience. Then cloud physical security platform Verkada recently revealed its new valuation of nearly $6 billion off the heels of more funding. And you'll want to hear how it's using new tech solutions to transform its industry. Stay with us on NYSE Live.
I'm just so honored and so grateful to you, Lynn, for welcoming us to announce our Time Person of the Year, the architects of AI. I want to take a moment to welcome Chris Lehane. You have been an incredible driving force, making AI accessible to everyone, and we are so glad that you are here with us today. We are focusing on the leaders and the people and the humans that are imagining and building this future that we will all be living in.
We had somebody ask us recently, why are you going out at this time of the year? The reason we're doing this is for our people. It's not about us. Our motivation for doing this transaction is to make this a better place for the next generation. We have a stewardship responsibility to our people to give them a professional and a financial opportunity that's better than what we have. And what I am very proud of is the team that we have here. This is a true partnership in every sense of the word.
Welcome back to NYSE Live. This past week, hospitality software platform Muse announced that it's raised $300 million in a Series D funding round, bringing its funding to $2.5 billion. I want to send things down to NYSE content creator Ashley Mastronardi, who has more on this story live from the trading floor. Ashley, good morning.
Good morning, Kristen. Joining me now to share more is Richard Walter. He's the founder of Muse. Richard, welcome.
Morning.
So, Richard, how significant is this $300 million Series D funding round for Muse?
I think it's a great validation of the work that we've been doing. I think it's a great validation of the strength of the hospitality industry, and I think the transformational change that we're going through. I think I heard your colleague talk about productivity, and especially productivity in hospitality is a big area that we're focusing on, and we're really helping our hotels go through that huge kind of change that AI will only serve to advance.
And how do you plan to allocate the new capital over the next several months?
Well, I think for us, a lot of it is still really going into, the way that we continue to grow, the way that we are actually kind of building up market share, both in Europe and in the US. And a large part of it is, of course, going into software development as well, where we're really, bringing together not just a single piece or a point solution, but really thinking about it as as an operating system with a very complex context graph to really help our hoteliers with decision making. And that's really kind of where I think agentic hospitality and lots of the different ways that we're kind of bringing AI into the platform itself, that's where you're really seeing those benefits actually really play out.
And regarding that AI, what specific use cases are you prioritizing, and how do you envision scaling the technology across the business moving forward?
For us, it's really about, improving decision making of, from anyone who's at head office trying to figure out, how should I allocate my spend? What kind of forecasts am I seeing? What signals am I seeing from the market in terms of, what's the summer going to be looking like? So, for example, here in the US, it might be, just how big of an impact will the World Cup actually have, but all the way through to, understanding, for example, if you're a receptionist, should I be upselling a customer that's right in front of me? Should I be upselling them breakfast, or should I be upselling them a higher category of room when I see them? And it's really to improve decision making across the entire kind of operations of both small hotels, even to some of the largest customers that we have.
All right, and it's been said that you've built a category-defining platform. How so?
Well, I think and I won't bore you with the details of the history of the hospitality technology, but it's been an industry which has been dominated by certain acronyms. So, for example, a PMS, the property management system, a CRS, central reservation system, CRM. All of these different platforms basically kind of working together, and somebody had to kind of think about how to actually piece them together, and that was usually the hotelier themselves, thinking about, how do I actually kind of make sure that all of these platforms communicate together? And I think one of the things that we've been able to do is really bring all of those things together in a way that now, when we put that AI layer over it, it really helps actually improve productivity in the hospitality industry. And I think that's been the main thing kind of charging us forward.
And what trends, or Richard, are you seeing in hospitality technology right now?
I think what we're seeing is, largely the infusion of AI. I think you can see that in terms of smarter chatbots. You can see that in terms of, for example, call centers now being entirely or majorly kind of AI enhanced. I think we're also really seeing a lot more search actually happening on LLM platforms, and especially the memory agents now really starting to actually kind of bite. So people are, actually searching with their preferences already stored in to the to the LLMs that they're using for search. And I think that in itself will actually have a very large effect in terms of, what consumers actually demand of hotels, and how they will be demanding more service and more personalized service than ever before.
All right, thank you, Richard Valter, founder of Muse. Thanks for joining us.
Thanks so much.
Kristen, I'm going to send things back to you in Studio One.
Thank you so much. We'll check in with Ashley a little bit later down there on the trading floor. But another company making news on the funding front is cloud security platform Verkada, which says its valuation now stands at nearly $6 billion after its latest funding round. Ashley Masternardi spoke with the company's CFO more about it, and let's take a look at that interview.
Yeah, I mean, look, we're announcing that Alphabet's independent sort of investment growth arm called Capital G is leading an investment round in us. They're investing money, raising our valuation almost $1.3 billion from the round we announced earlier this year. I think it sort of is a testament to how AI is changing the physical world. We all use various things that, can search things or chatbots or other stuff, but in the physical world, AI is really helping protect people, identify situations, deter crime, drive investigations. I think their sort of recognition of what we're doing in that space is obviously very validating, and we continue to invest more.
And speaking of AI changing things in the physical world, as you mentioned, can you talk about the AI use cases for your products? What is it actually doing?
There are many ways in which AI can help make physical security better. I'll just list three of them. So one of them is how do we deter crime faster, right? So what does the deterrence look like? That looks like, our ability to identify somebody in a scene and then identify attributes of what's going on in that scene. For example, they're loitering or they jumped over a fence. And then find images about these people and then actually generate voice responses that say, hey, you in the black hoodie, you're trespassing on the property. We're going to notify the police if you don't show up. It means things like helping identify and respond faster. So in that situation, really being able to say, hey, what is a threatening activity, what maybe is not? For example, somebody loitering in an ATM vestibule or outside of a retail store for 5 or 10 minutes, right? And then be able to create alerts for individuals who might want to investigate that item, right? And then lastly, it's how we actually investigate incidents that happen. We live in a world that is unfortunately not getting any safer, and so when incidents happen, it's oftentimes takes law enforcement or other professionals at the businesses days or weeks to find the individual, track down the video, sort of compile it all together. AI makes it really, really easy to scan across, hundreds of devices, tens of hours of footage, find what happened, find that, individual, and then investigate that. And all of that is sort of, made possible because Verkada has a sort of cloud first, AI first technology stack that really drives physical security.
And how effective has this technology been? What has the customer feedback been?
Well, I think it's been pretty outstanding. It's, partially driven by the fact that we have so many customers now, over 30,000, almost 100 countries globally, almost 100 of the Fortune 500 are using this. I think we have examples of where folks are really saying, hey, you're now able to protect sort of places that were very hard to protect before. For example, Terawatt is a company that does so outdoor charging and for folks like Waymo and others, right? What they're looking at this is saying it's very hard to secure an outdoor space. Your home or a business, you can arm the doors, right? Type in a PIN code, and then there's like an alarm system that works. Well, what do you do in a large fenced-in area? How do you protect that, right? Well, the best way to protect that is using AI, video, and other sort of systems that are able to detect what's going on there, and then say, okay, somebody should take action, whether that's dispatching law enforcement or if it's just, hey, let's notify the owner of the store that there's somebody on the property, and then they can decide whether they want to sort of that's a customer or somebody that shouldn't be there.
All right, and there have been a number of high-profile crimes recently. How do the headlines of the day underscore the need for security?
Well, I think it's sort of twofold. One is, as I mentioned earlier, I oftentimes ask people, do you think the world is getting sort of safer or less safe? And unfortunately, I think most people answer that in the same way, which is, less safe. And so the need for security is only going to increase in the world. And whether that's retail crime, whether that's school safety, whether that's, museums in this case, the need to sort of protect people and places is an ever increasing kind of market trend. I think the second thing is what we saw in the Louvre incident is sort of unfortunately emblematic of what we've seen in other security incidents where there were insufficient cameras or the cameras were offline or they were sort of pointed in the wrong way and people didn't really know that, right? And so, we live in a world now where, you can check in on your dog or cat at home, but most businesses can't even check in on the, multi-million-dollar paintings that are sitting in that hallway. They don't have devices that can stream to the internet or stream to their phones. And so We're making that connected technology that allows businesses, municipalities, cities to really be able to make their spaces safer and smarter. And that demand is only going to continue.
All right, thanks again to Verkana's CFO and Ashley Masternardi for that interview. Well, stay with us because up next, learning platform Preply reached a new milestone last week, and we'll give you those details on the other side of this short break.
I know 100 years isn't much in the New York Stock Exchange laurels, but we're very proud. First U.S. airline to reach 100. The resilience and the determination to move forward despite all odds is something that I think we're all proud of. And we've had a great opportunity to celebrate this year. The power of obsessing on our customers is what makes Delta really great. And my superpower, I'd like to think, is obsessing on them, on these people, so that they can go do the job. And it's not just me, it's our leadership team in terms of making it happen.
It's a bit of a pinch me moment. I mean, everyone's here. Here we just rung the New York Stock Exchange bell. In a lot of ways, it's a dream come true. When you walk around the NYSE floor, it's just emblematic of the American dream. Look, if I can do it, others can do it too. So believe in yourself, work hard, be the best you can be every day, and it compounds.
A plan to go and change the way people fly. It is the next step. When we look back at what we promised to go do and then we go do it, it'll be the foundation of our business that builds us to the next step. And it's because of the people here and what you all did, which was enabling greatness.
Welcome back to NYSE Live. Preply, which is using artificial intelligence to shape the future of education, announced last week that it's reached unicorn status after a $150 million Series D funding round. Joining us now with more from the floor is content creator Ashley Masternardi. Ashley, down to you.
Firm WestCap gives Preply a $1.2 billion valuation. And joining me now to share more is Kirill Bagai. He is the co-founder and CEO of Preply. Kirill, welcome.
Thank you. Thank you for having me. It's quite exciting to be here.
All right, so congratulations on the news of this funding round. How do you plan to use the additional capital to support the business?
So just to level set, Preply is the most human and most efficient way to learn a language. And since inception, we have delivered more than 100 million live classes, one-on-one personalized live classes with tutors. So coming back to your questions on Series D, we are going to keep investing in our product and AI to help making our journey even more personalized and help more and more customers around the world.
All right, and this was led by WestCap. They're the VC firm that also supports NYSE-listed Klarna. Why did you decide to bring them on as a strategic partner?
Well, first of all, we are very excited about our partnership. WestCap is great. They bring a lot of strategic view on what's next coming for Preply and marketplaces like ours. And as you mentioned, they've been involved in some iconic brands like Klarna, Airbnb, and StubHub, so that they definitely understand very well the next stage of our journey. A part of it, we really like people on another side. They have a very nice team, and they share the same view as we do. The future of learning is going to be human-led, AI-enabled.
All right, and you say human-led, AI-enabled. This has been around, this virtual tutoring, since 2012. You were way ahead of the curve in terms of virtual learning that really took off during the pandemic. Did you see a spike or a bump in business in 2020 when the pandemic hit?
We have. A lot of people were, of course, staying at home. So a lot of them turned to learn online. So, and I think that's where online learning really started to picking up. A part of it, people were isolated. So they also were looking for those human connections that we have on our platform.
And you say that it's human learning powered by AI. Can you break that down for us? What part does AI play in this?
Yes, so we apply AI across all the user journey. So first of all, we help learners to connect and match with the best tutors in the world. We have 100,000 active tutors on our platform from more than 180 countries. And finding that one right tutor for you is one of the biggest drivers of success. So that's the matching. And then when the learning journey starts, we have all the classes in our video classroom. So with AI, we help learners and tutors to analyze their lessons, track progress, and we also started generating AI exercises for them between the classes. A part of it, we also have a tutor site. Tutors have a lot of administrative tasks, and really helping them to automate them so they can focus on what they do the best, teaching the world.
All right, Kirill Bagai, CEO and co-founder of Preply, congratulations, and thank you so much for joining us at the New York Stock Exchange. Kristen, exciting news from the floor from Preply. We're going to send things back up to you in the studio.
Ashley, thank you so much. Yes, you're right. We're seeing this deal-making activity pick up. Stocks near record highs. Interest rates have come down. That is ripe for deals, and we'll continue to follow these companies, of course, along their journey, perhaps to the capital markets one day. Speaking of the capital markets, we do see stocks open for trade like usual. It was a snowy mix coming in this morning for those commuting in the tri-state area. But you're taking a live look at markets with the Dow up 0.4%, or about 180 points. It's going to be a busy week on Wall Street. We have that Fed decision due at 2 p.m. Eastern on Wednesday. There's a look at the S&P. It's up about 0.4%. A lot of earnings as well. In fact, the busiest week of earnings during this reporting season. Caterpillar reporting Thursday before the market opens. It's an NYSE listed company, as well as a whole host of other big tech names like Meta, Microsoft, and Apple reporting their results too. We'll be back here same time, same place tomorrow. You can catch us on all the streaming services that you see on your screen right there. We're live weekday mornings from 9 to 10 a.m. Eastern, giving you everything you need to know about the markets, all that's happening here at the New York Stock Exchange. And, of course, the bell ringing at 9:30 a.m. Eastern from that Bell podium, as we always see. For those watching, stay warm, stay safe, and we'll see you back here tomorrow morning at 9 a.m. Eastern. Have a great day.
Welcome to the public market.
The New York Stock Exchange is a cathedral of the capital markets. So there are a few places more fitting to consider the future of American financial system than this one.
So thrilled for this next chapter to begin today with all of you in this historic building.
The day we went public, it was the most bizarre day of my life. He said, yesterday, Shake Shack was the most beloved hamburger company in the entire country. Today, it's going to be the most reviled stock. He said, you guys are never going to grow into your $46 valuation. How many Shacks did we have 10 years ago? 31 Shacks. And did I not just hear Rob say that we're going to have 1,500 Shacks? So yes, we grew into that $46. It's all because of you guys. I'm so proud of you, every one of you. You work so hard to make so many people happy, and you make your communities better. What more could you ask for?